Hi friends, welcome back to Stockwood channel, a channel where we discuss investing strategies with facts. So friends, today I'll be talking about the cement industry in India, and I'll be talking about various topics that will be very important for the viewers to have a concise and informed decision before investing in stocks in the cement industry. Right? So without wasting much time, let us look into some of the topics that I'll be covering in this video. So I'll be starting with the details about the Indian cement sector, followed by the three cement stock analysis, and then the current trends in cement sector. So friends, these topics are very important for any investors to take a concise and informed decision in the stock market for short term and long term. So I request the viewers to watch this video in entirety to make full use of this particular video. So India at the global level is placed at number 2 in terms of cement production and also the cement consumption. And also currently ICRA has estimated that in FY22 the cement production in India is expected to increase by around 12% year on year. So to understand more about it, what are the key drivers that is driving this consumption in India? Let us look into some of the points. So you might be aware that Prime Minister has launched a new infrastructure plan, that is the National Multimode Connectivity, or more popularly known as the Gati Shakti, which will actually connect the various points of the country through multimodal transport network. So these kind of infrastructures will need a lot of cement, and this is one of the reason that will drive the consumption of cement in the country. In addition, there are other schemes that the central government has announced in budget at FY 22-23, like affordable housing schemes and road projects. This will again increase the consumption of cement in the country. Some of the other schemes again announced by the government are urban rejuvenation mission like Amrut and smart cities, which will all actually drive the consumption of cement in the country. Along with this, with the rising income of the middle class, so there is more consumption from the middle class in expanding their current households. So friends, a big shout out to my channel by hitting the like button and subscribing to my channel. It means a lot to me. So moving further, we'll see more information about the cement industry. So if you see the consumption pattern of the cement in the country in FY21, the housing and real estate are the major contribution for the consumption of the cement. Almost 55% of the consumption come from housing and real estate, followed by infrastructure, industrial development, and low cost housing. Right. And also in terms of the top cement producers in India, Ultratech is one of the leading producer with a 31% of market share, followed by Ambuja Cement, ACC, and Sri Cement. Now looking at the cement export from India, Sri Lanka will contribute the highest importer of cement from India with almost a million metric ton, followed by Nepal, Bangladesh, and Maldives. At the global level, China is far ahead in terms of producing and consumption of cement, with almost 2.5 billion metric tons of cement produced in China, and India is far second with almost 330 million metric tons. In the coming years, the India export business will also increase, mainly with the increase in export to countries like Middle East and Africa. So these all are actually driving the consumption and production of cement in India, and this will be a booster for the country's cement industry. Now let's look into some of the cement companies and analyze it with several parameters. So for the purpose of analysis of the cement companies, I'll be analyzing the cement stocks based on these parameters, mainly the market share the company holds, the PE ratio, the return on equity, year on year sales change, year on year profit change, the promoter holding, and the debt to equity. And also in the current market, it is very important to have a look at the industry PE before analyzing any stock so that the valuation are on par with the industry. So the first company which I am analyzing has a market share of around 30% with a PE ratio of 24.1, which is much lesser than the industry PE. Also, the return on equity is around 15%, and the year on year sales and profit are increasing at around 9.4% and 45%. The company also has a good promoter holding almost near to 60%, and the debt to equity ratio is very minimal at zero point 0.2. So the company which I am talking about is Ultratech Cement. Similarly, the second company which I am talking about now, it has a market share of around 8%. The PE ratio is still lower than the industry PE at around 23, while the year-on-year sale is increasing, but the year-on-year profit is reducing. So here, friends, it is not that the company is making losses. The profits have come down on a year-on-year basis. The company also has a good promoter holding of almost 56%, and the debt to equity ratio is zero point 0.2. So this company is I'm talking about is Dalmia Cement. The third stock has a market share of almost 5%. The PE ratio is much lower than the previous two companies with around 18.9 PE, which is much lower than the industry PE of 28. And the year on year sales has increased by around 6%. The profit has reduced almost to the half of the previous year. The promoter holding is also at 62%, but the debt to equity is around zero point 0.7. The company I'm talking about is Birla Corporation Limited. So looking at this analysis, Ultratech Cement is a much better stock compared to Birla Corporation because the company has a good market share and also the year-on-year sales and the profit is in the positive range. While the company Birla Corporation has a lower market share and also the year-on-year profit is reducing. So investors have to be cautious while investing in these kind of companies where the market share is lower and the profit is reducing. So if you look at most of the companies in cement sector, the profits have come down drastically in the last quarter. So there is a particular reason why these companies profit have come down. I'll be talking about that in the next section. So also the company which I'm positive in the cement sector is JK Cement, which investors can also analyze on the similar basis. So now let us look how the cement industry is currently doing in mid 2022. So for this, I'll play you a short video and further I'll explain about it.
In the past quarter, the costs clearly have gone up on a per ton basis. So my question to you is, how much is that? What was the cost increase? And also in quarter one, going by the current pricing, going by the current input cost spike, what will effectively be the price increase? Go ahead.
Well, Nigel, thank you for having me. Of course, as you know, industry is faced with, because energy is cement industry is very energy intensive. I think the coal prices have taken us by complete surprise. Coal prices have risen up, just to give you dynamics, from $50 a ton to $300. So they're 6 times up in last 1.5 years time. That has really taken the sheen out of the cement industry. Cost increase from the last quarter to this quarter is about 500 to 600 rupees a ton, so approximately 30 rupees a bag. Going forward, we expect that coal prices of $300 per ton is unsustainable. Everywhere in the globe that coal is a dirty fuel, but I don't know why coal is being consumed or more consumed than ever before. And prices have, in fact, energy prices, when you look at oil prices, they've gone up from about $40, $50 to $100. Or gas prices have gone up just about double. But coal prices have gone 6 times. So there's something abnormal about the coal prices. I hope and pray that coal prices should subside, come back to $150 to $200. This is what the range should be as compared to other metrics of the energy.
So the main point that this gentleman is trying to explain in the video is the cement industry is currently expecting an unprecedented increase in the input cost, and that is actually hitting the margins of the companies. Right, the main reason for the increase in input cost is the imported coal has increased by around 70% from January 22, which is actually increasing the input cost for the companies. So coal, which is a major ingredient in terms of powering the furnaces in the cement industry, has increased by around 70%, and that is actually increasing the input cost for the companies. And also the fuel like diesel and petrol has increased by around 40 to 50%, and this is also actually hitting the margins for the companies. So, according to one of the leading securities, that is Access Securities, the higher input cost is going to have an impact on the operational performance in Q1 and Q2 of FY23, and this probably will cool off in the later quarters. So this kind of margin pressures the cement industry is expected to face in short term, and this will have further drop in the cement industry stocks. And also one of the important update in the cement industry is you might already be knowing that Adani is buying the Holcim India cement business, which actually controls Ambuja Cement and ACC. So this kind of a takeover of these companies from another entity will actually have a short-term shocks. So investors who are planning to invest in Ambuja and ACC Cement are expected to see some volatility in the stocks in the coming days. So friends, hope you like this video. Please hit the like button and subscribe to my channel. I'll see you in the next video. Thank you.